All right, welcome everyone to the first ever and not last earnings call for Africa Eats. This is the Q4 report. What we're going to do tonight is go through the written Q4 report, the highlights of the written Q4 report. We'll open it up to Q&A, and then we have some announcements at the end for the crowd. This is being recorded for those of you who can't join us thanks to time zones. It is currently 10 a.m. Mauritius time. And we are a Mauritius company, so we're making it convenient for our shareholders there. To remind everyone what Africa Eats does, in case you've never seen us before, we are an investment company, but we're mission driven. We focus on putting a dent into hunger and poverty in Africa, and we do that through for-profit means by investing in companies, specifically fast-growing, profitable companies that build the food and ag supply chain across the continent. And that is succeeding really well at both making money for investors as well as putting a dent into hunger and poverty. And today's an earnings call, so we're going to focus much more on the finances than the impact. We'll do impact another day. This is the new map. This is the new map as of Q4 2024. Again, it's the Q4 report tonight, right? Even though it is February, I don't know, it's 18th, I believe, in Mauritius. Um, we're mostly going to talk about Q4. We're going to have as few forward-looking statements in this presentation as possible. So looking back to Q4, there were 22 active companies in the portfolio based in 8 countries. So the dark countries are the ones where the companies are based. The yellow is where they export their food to. Plus, they just do some exports to other continents as well. And gray, we just haven't touched yet. We haven't gotten there yet. All right, big news from Q4 was that we rang some bells. So here we have 3 companies and 3 bells. There are other bells from other supporting organizations as well. But we did this on December 3rd, 2024, when these 3 companies were listed on the new CEMEX segment on the Stock Exchange of Mauritius. So Africa Eats is a public company, if you missed that news. And so are 2 of our investees, Elite Meat and Zoeto, although we usually call Elite Meat PMP because they operate under a different name. We've blogged about this, we've talked about this, we've gone into great details about this, but it worked. We spent all of last year on this project. A lot of people thought we were daft, but nonetheless, we pushed forward. It was the right thing to do, and it's working. So this is a screenshot of the CEMEX segment as of December 3rd at the end of closing first day. So the market closes at 2:30 p.m. and it takes 15 minutes for the quotes to get posted. And just to be clear, these 3 companies are on the ordinary part of the official part of the stock exchange. They're just like the rest of the companies listed in Mauritius. And they're on a new segment. And the new segment is for fast-growing, profitable companies. Fast-growing as in high growth rate of revenues, profitable as in net positive. And in case you haven't visited this page, a couple of little clues on here. So like most stock pages, it shows up or down versus yesterday's closing price or the last trading day. It shows the change of price and whatnot. So these 3 companies listed at $2. They list in dollars, USD. $2.25, $1.85, and $1.60 was the price for day one. The change was that because there was no price before that. Volume is listed in shares, and the value is a little odd on this website. On the same day, it's listed in dollars, and then sometime overnight, it gets updated to be in Mauritius rupees. So you'll often go to the website and you'll see that a billion value has traded. That's a billion rupees of value. But again, the shares trade in dollars. So that's just something that the market does because they do trade some stocks in rupees and some in euros and some in pounds, and that's just the way to keep everything straight. You can get more details on any of these 3 companies over here, but I'll show you a better place to get details. And this website is literally stockexchangeofmauritius.com. It's just a screenshot from that website on that day. So in November, 2 weeks before that day, we closed a private placement, or specifically 3 private placements, one for each company. These are 3 separate companies. They're all listed on the stock exchange. They all did private placements beforehand, and we just did it together. which is something that's novel. The world just generally doesn't do things like this.
Hi,
We like to,
Looney.
yeah.
The presentation stopped, screen stopped sharing.
Oh, okay. Did it ever start? Okay. Maybe I didn't hit screen share. All right. Real quick for those who are recording. Yeah, I don't think it was ever showing.
Yeah.
Here's the hunger and poverty slide. Oops, sorry about that. Here's the map. Again, dark colors are where the companies are based. Light colors are where they ship food to. This one's a little browner than mixed because Agromix is opening a factory there. We rang the bells. And here again is the screenshot of the Stock Exchange of Mauritius. Uh, so last closing price, change from yesterday or last day of trading, volume, and then this strange value column. Okay, so in this private placement, we had 88 investors participate, which was a lot. Some of them invested in one company, some invested in three companies, some in a few in two. Two was a weird choice. Um, it was a lot of paperwork, a lot of investors making a lot of investments, but it was 88 investors, and that included seven institutions in Mauritius. And that increased the number of institutions investing in Africa Eats by six. So before that, we had family offices, but no institutional investors. Now we do. All right, so let me tell you a little bit about Zoeto Holdings. So there's, like I said, two other companies listed. Zoeto is this one down here. This is the logo. They're based in Lilongwe, Malawi. Here is a map of the country of Malawi with highlighted their 22 retail stores. They're mostly a wholesaler. They are the wholesaler and exclusive importer of certain aggregate supplies. And the way Victor usually talks about this is animal medicines, pharmacies for animals, chickens, goats, pigs, farm animals, right? Not cats and dogs. This is their growth rate. So when I discovered them through my accelerator back in 2016, they had three little stores. Each store did about 10,000 in business per year. It was a $30,000 year, more or less in dollar terms. And here we are. It's 8 years later, a little more than 8 years later, and they are over $1 million in annual sales. This is why we brought them to the market to prove that the market will fund companies that grow like this. This is a very fast growing company. The other one that listed is PMP. So Elite Meat Processing is the name of the holding company in Mauritius, and the company operates under the name Paniel Meat Processing in Rwanda. So PMP, you can follow the line here. It goes right there to Kigali. Online, if you go to africaeats.com and search for PMP, you will find a video showing off their new chicken facility. So the use of funds for Zoeto was import of more food, a hatchery to start making day-old chicks. The use of funds for Elite Meat or PMP is to finish construction of this chicken facility. And when it's operational, it will be the largest chicken processor in the country of Rwanda by a lot. So this is a picture of chicken house number one. And if you go watch the video, he'll show you chicken house number two and number three and number four and number five and number six. So this company is getting to be six times bigger. And next to that, you will find the new hatchery because this company is also hatching chicks. And next to that, you'll find the slaughterhouse and all the power required to run this, all the processing, and even housing. I think the video skipped the housing for the workers, but when you build something of this scale, you also need housing for the workers. Uh, this will be probably more buildings than any three or four other companies combined. Like just the scale of this is huge in terms of operations. And this company, oh, and here's some screenshots from the video, so we can see chicken houses. I think this is two and three, and four and five, and this is an empty one in one of the processing buildings. And what you see with one chicken house is they did $1.8 million. This company, again, is building five more chicken houses, bringing the processing in-house, bringing the hatchery in-house, and they also do beef and pork, and some goats and sheep and some other animals as well. And again, this company, when it was discovered back in 2017 at the Fledge Accelerator, was $35,000. They were grinding up beef and pork to make sausage by hand. So we have seen an enormous amount of growth in this company, in this case, in 7 years instead of 8 years. Okay. We just updated the post on the other fast-growing companies. If you would like to see what they did in 2024, I'll give you a little hint of that later. But you can also go to the website on aggregates.com, and it's one of the latest blog posts. Okay. What else happened in Q4? There is a very large conference, takes place in London every year. It's called AFSIC. I don't know if it stands for anything. It's the investment conference for Africa. And Jumana would have been there 3 times now, 4 times there.
You think you've been there 4? I've been there 3.
Yeah. Okay. This was the first time we sponsored. So this is the Africa Eats booth. We were in this. It was a 2.5 day conference, and we barely ever got to leave the booth. We had meetings in here pretty much constantly. And we brought some guests with us. So this is me. If you don't know me, this is Jumani, who's I can see on my video. This is Shaman. He is the managing director of Persium Capital. This company over here, they're the ones that are investment advisors that brought us to the public markets. And this is Sunil. I'm not going to try and say his last name. Sunil is the CEO of the Stock Exchange of Mauritius. And neither Jumani and I, sorry, I can't remember who she is. She was in the booth when we took the picture. She's from another organization. All right. Moving on to finances. We did say it's an earnings report. So in the Q4 report, we have listed, of course, the financial report of the company. This is just a screenshot from that. This is the balance sheet. And we start with the balance sheet at Africa Eats because we are an investment company. So the value of our company is based primarily on the investments we make and not on our cash flows. We're not here to bring in more money than we spend. We're here to make more money than we spend. We're here to put dollars to work and have those dollars turn into more dollars. And so here you can just see on here, I will just zoom into a few things. In terms of assets, we don't have much money in the bank. We never have much money in the bank. It's not about having a big pool of capital. If we have it sitting in the bank, it's not being put to work to grow. And so this is some of the money from the private placement minus whatever we spent in December. And as we bring in more, we will be raising more capital. As we bring in more, it gets spent primarily as equity and debt investments, but some other things as well. This is the core of the balance sheet. So we have 3 types of investments we make. We primarily make equity investments into these companies. Picture the map again. We own a minority stake in those 22 companies. We did dabble in leases for a while. Didn't find that was the best use of funds, so that's why that's shrinking. And then we do operational capital loans and invoice financing in order to help these companies grow when that's needed. That's been pretty much holding steady over the last bit. We did a lot of that last year. I think we'll see that in the cash flow statement. And there are 2 stars up in the equity line. And the reason there are 2 stars is that the value of these companies is based on how well they're growing. How fast is their top line growing? How well is their bottom line growing? Are they up? Are they down? Is the speed of them up or is the speed of them down? Right? Valuing private companies is complicated. And so we make our best estimate. We do that based on whatever data we have. This Q4 report was published on January 21st, which meant we had 20 days after the end of the quarter to gather as much information as we could. We did not have everything by then. So you'll see this 2-star show up in all of the financial models, all the financial reports. And this is just the data we had at the time of publication. Our best estimate is that the portfolio was worth approximately $26.5 million of equity. Loans are a lot easier to manage. We know what we've been paid. We know what we're owed. So that's, has digits down to the last digit. And then in terms of lending, we do a little bit of that. So there have been times in the past when one of our companies needed an operational capital loan or an invoice financing. And as I said, we don't keep a lot of cash on hand. At times we didn't have the cash to make that investment. We turned to our then private shareholders of a private company, asked them if they would lend through us, right? We would guarantee it basically on our balance sheet, and we would manage the loans. And so we have a mix of short-term and long-term liabilities in that form, but that shrunk over the last year. We did less of that in 24 than we did in 23, and less than 22, and so forth. And we'll see if that shrinks or whether we go the route of raising corporate debt in the future or not. All right, Jumani, you want to add anything before I move on to the next financial statement?
No, I think that's good.
All right. All right, next up we have the income statement. So again, we're an investment company. We, of course, watch our income statement, but we watch the balance sheet much, much closer. And so let's just dive into what's shown in here. In terms of revenues, the driving force here is the gain on those investments, right? The increased value in the balance sheet shows up as investment gains of revenues. That is IFRS standard, same in GAAP. If you look at Berkshire Hathaway, you'll see their line is similar. That's their driving force. And you'll also see a note that Warren Buffett puts on his income statement, which is we're required by, in his case, GAAP standards, in our case, IFRS standards, we're required to market on a quarterly basis. They mostly own public companies, not private companies. The public, as he'll say, the public markets go up and down a lot. They do that irrationally. So their number goes up and down kind of dramatically and doesn't really provide the underlying long-term value of these companies. We have less of that problem because most of our investments are private companies. So we're only marking to market on a quarterly basis. Their price doesn't always change every quarter, depending on the news and how seasonal they are. But again, this 8.49 million is based on that $26.5 million estimate. We get some money in from our loans. We're not, we're not running the company based on our loan income or our lease income. We get some write-offs in those leases and the loans. Typically, that turns back into more equity more often than not. And then we don't have anything else. There's nothing else on this revenue line at the moment. That probably will change in time. And offsetting that is we don't spend a lot of money on expenses. So we just call it people cost. The total cost of our 3 full-time employees and our fleet of part-time employees was all of $292,000 last year. We spent much more on that on fundraising fees. You can look down a few more lines on that, which is why it got so much bigger. And legal got much bigger as well. The big project for 2024 was to open up the public capital markets to us and the SMEs. That cost money. So we invested that money in the form of expenses, in the form of paying Perzim Capital. Hi, if you guys are here. Paying Rogers Capital. I know you guys are here. Paying the fees for the SEM and everything else to get public. And we believe we'll benefit far more from that in the future of the work that's already been done. So we thought that was a really good long-term investment. And so far, it's been great for the 2 other companies that listed. I'll tell you a little bit later. It hasn't shown up yet for us. It will, but it hasn't yet. And then everything else here is just normal operations of running a Pan-African investment company. We travel around. We fly our CEOs to Nairobi once a year. That's most of the travel cost in there. And it really does cost $11,000 to wire money. Like just sending and receiving all of these investments. We do dozens of investments per year. It adds up in bank fees. That's the one I would love to get down, but in the end, it's not big enough to fret over, and we've never found a solution to that. Oh, okay. Jumani, last word on income statement.
Yeah, maybe the slide before. So I guess just to recognize that I guess when we do our income statement, or the way we fair value our investments, we it's called fair value through profit and loss. So what you see there in terms of the revenue lines or investment gains, what you see there, so the 6 million back in 2023, and then the 8.5 million almost in 2024. Any of the gains that we make from our investments are reported in our income statement. So these are obviously non-cash, but the actual value that's gained. This allows us to always report the most up-to-date changes in our portfolio on a constant basis. And the last one I'll mention is the loans written off, the 909,000. That was just the correction that we were doing from a previous auditor that had made a mistake in terms of how they allocated the shares that are owned by the management. So apart from that, just letting you know that in the way that we report, it allows us to be able to, I guess the reason we chose the fair value to profit and loss is that we are listing our companies. We've listed 2 companies. We'll continue to list more companies in our portfolio. And so you're able to see those gains or losses, even though we don't have those. We're able to see those reflected almost instantly in our, every time we report our quarterly numbers. But happy to answer any specific questions you have in terms of how we allocate or how we go about doing fair value through profit and loss.
And I see some questions in the chat room. We'll stop for questions in a few minutes here. And I think just the cash flow statement and one other thing after that. Okay, last one is, of course, cash flow statement, tying together those two. Again, we get to the double star and the fair value movement between the other two. Not much else to say from that. Cash moved during the period is the $440,000. That was pretty much what was in the bank at the end of the quarter. Um, uh, and you can see here for the year, we only raised $3.3 million, $3.27 million. That was the total raise of equity for 2024. The goal was 10 million. We did not hit that goal in 2024. We do hope to hit something like that in 2025. But we're satisfied that we did, in fact, prove that the public equity market is a place to get capital for this style of business. And we do expect that that will come to fruition. That we did say to both the stock market in Mauritius and our investment advisors and our managers that our expectation was that this will take multiple years before large amounts of capital are flowing. We don't know how many years and how big that capital flow will be. It could be humongous. And in the meantime, this was an all-time high. You can see from the year before, we didn't even raise $1 million in equity the year before, raising it solely from family offices, basically, and private investors as a private company. So much improved number on the equity side, and we didn't need to raise as much on the loan side. This is basically the $700,000 of capital we raised as loans in 2023 versus only 200,000 in 2024. We only do that when we have to. And I did this without the call outs. Again, you see the 2 stars based on preliminary data. And down on the bottom is the investment activity. So in 2023, because we had brought in the $750,000 in debt, we did a lot more loans. There were a lot more asks that we could fill with loans, and we only did a modicum of equity investing. Whereas with more capital in 24, we flipped that around. We did a lot more equity investments, a lot less loans, and you can see the return. This is basically return on principal, the return on capital. So for the loans that went out, we brought in almost $700,000 back. Do that math, 680, plus some interest on that. Okay, and the last topic here in this section is valuation. So how do you value a company like Africa Eats? That is a question that we got a lot when doing the roadshow last year. We did the pitch in Q4. In Q4 alone, only maybe 40 or 50 times. In 2024, probably 100. The roadshow was rather intense. All right, so this is the Perigeum Capital valuation report. It's 60-ish pages long. It goes into great detail on how they went through our portfolio and came up with their valuation. It's a mix. So when they could, they used the discounted cash flow. They used a multiple on EBITDA. They used a couple of comps. They merged these together depending on the companies and what data they had on each company. Again, it was complicated. It took them about 2 months to get through this. And in the end, this is the summary page. And so company valuation using data through June of 2024. We had originally been targeting around October to get the public listing done, and it took a little bit longer than expected. Not too much longer. Um, and so bottom line, they came up with $26.7 million of balance sheet value. And if you take out the liabilities, 25.9. So here's what you do to value the company. I think I have summarized in another slide here, but here's what you do. You take the value here, which is basically the assets um, minus the liabilities, and then you divide by the number of shares there are. So at the before the private placement, there were 10.5 million shares, 10.6 million shares. You do the math, and it comes out to $2.45 a share. We had been selling shares up to that point at $2.25. We have a history in this company when we were private of once a year increasing the price based on a mark to market as soon as we had enough data, and then offering our shareholders one last chance to get last year's price. So we kind of kept with that tradition in this private placement. We had set the price at $2.25 in March. We just kept that price in November, give everybody a slight discount and a slight deal, uh, and uh, and just noted that the value was higher. Um, and so again, that's highlighted here, basically $26 million, uh, uh, and you get $2.45 and instead of 225. And the price today is $2.50. So this is a screenshot from the Tuesday market um, a detail page of Africa Eats. We trade under the symbol EATS, EATS. And you can go to tuesday.africa/eats to see this page on anytime you want. This is the 1 month view because we don't have a 3 month view. So it's missing 225 out here in December. Um, but the price has been going up most every week. It did dip once in December, pop back up. And it's up to $2.50 as of the end of last week. So in the Q4 report, it's time to go back and mark to market again. Again, this is where the $26.5 million value came in. So one thing we did before looking at that, and we had looked at this in Q4, was we looked at this as we were raising capital in Q4. What's been the growth of the share price? So again, we knew it was $2.25 March of last year. We knew it had grown somewhat, but we didn't charge our investors that price. We knew when we started the company in 2020, which was July of 2020 was the incorporation date. We knew we started at $1 a share. And it went from $1 to $1.25 to $1.65 and then 225. That's all documented here. This is just a screenshot from the Q4 report, and it's not even copy paste. It's literally just a screenshot. The best fit line for that price increase is shown in blue here. The best fit, if this is an exponential growth curve, is 22.5% growth. That's just what the math says. It's not linear. Seems to be an exponential growth. Again, we're like Berkshire Hathaway. We think it's going to be an exponential growth. But the best fit just happens to be a 22.5% compounded growth. So we're just scrolling up the screen here. It's highlighted here. Compounded growth rate at 22.5% is what it has been doing. We're not predicting it will do this in the future. Our goal is to try and hit these numbers, but we are not making a forward-looking statement saying we're hitting this in the future. In the Q4 report, though, with the $26.5 million value in the balance sheet, if you divide by the now 10.8 million shares, that price is $2.58. So again, if we just pull up the balance sheet, which I conveniently have right here, we take the cash plus the investments, we subtract the liabilities, we get $27.8 million, 27.9, 27.885. 27.9 divided by 10.8 million shares, that's 258. So we are claiming that the value of the company as of end of Q4 was $2.58. Right, looking back at the results of 2024, we don't get that data on January 1st. We don't get all the data on January 21st either. We are trying to finish off the last of that data now, so our annual report has everything in it. We still might be missing a few things by then. Right, and again, the share price is getting close to that 258, but it's made it back up past 245 to 250 as of last week. And with that, I will pause to take questions.
There are a few in the chat.
Yeah, you wanna read them off?
Sure. So one of the questions here is from Tom. I guess he wants to know, what does Tuesday markets do exactly? And yeah, the first few months of market making, what has that experience been like for Tuesday markets?
Oh, okay, great. I'll go back over here. All right, Tuesday Markets does two things at the moment. Its mandate is a separate company from Africa Eats. It's separately funded. Its mandate is to make markets in the continent of Africa. Not necessarily stock markets, could be any other markets. The Tuesday Market Teams is looking at all sorts of things that it could do. What it did to start with, though, is two things. One, it is the market maker for Eats, Elite, and Zoeto on the SEM. So all three companies that are listed on the SEMX segment. I'll explain what that is in a second. And the second thing it does is it built an app and deployed an app where anyone who uses the app, it's on your phone, downloadable, or it's just on the computer is Tuesday.Africa on your browser. If you go create an account there, you can buy and sell those three companies and only those three companies, only on Tuesdays. Generally on Tuesdays, by default on Tuesdays, we should say. And the reason we called it Tuesday Markets is that we asked the SEM if we could please concentrate all the orders to a closing auction on Tuesday afternoons. And they thought that was an interesting idea. I won't say they thought it was a great idea, but they thought it was interesting enough to try. And so the market usually closes at 2:30 p.m. every day, 5 days a week when there's no holidays. And it still closes at the same time for these three shares, but there's a closing auction from 2 p.m. to 2:30 p.m. Mauritius time, GMT +4, for these three companies. And any other company that would like a closing auction can have it as well. And what we mean by closing auction is that all the orders in the app all get uploaded to the market between 2 and 2:30 p.m., but they don't instantly trade against each other. They all settle at 2:30 p.m. And we did this because we thought this would concentrate and attract more orders by collecting them over the week. And we thought we would come up with a fairer price for everyone involved because when a closing auction happens, everybody settles at one price. So if people are bidding a few pennies off, as long as the buyer is buying higher than the sellers are selling, everybody gets one price. And so nobody should feel like they got the wrong price. All right, so what Tuesday Markets does in that auction is that it looks at all the orders, whether they're in the app or not. Right? It just looks at the order book in the app and it looks in the order book on the stock market and makes a determination of whether there are more buyers than sellers. And in a week when there are more buyers than sellers, it sells shares. And in a week that has more sellers than buyers, it buys shares. Not at any given price, not at any price. So the other thing that a market maker does is that it posts to the market as limit orders a buy price and a sell price for each company it's making a market. So right now there is an order for about 50,000 shares of Africa Eats at $2.50 that Tuesday will buy. And there's an order for about 50,000 shares at $2.55 that Africa Eats will sell. And the same thing's true for the other two companies. I don't remember off the top of my head what those prices are. Well, we can go look it up. Let's just go live and go look. So we can go to the market and we can look up the other two companies. So
Great.
right
While
now,
you do that, so Looney, while you do that, the other great thing is to also chat about the volume of transactions. I thought that was another question that was
okay.
asked
All right. So
compared
here's
to
the
the rest
price
of the
of,
stock market.
gotcha. So here's the price of Elite Meat. It's gone up to $1.95 from $1.85. And so you can't see it on this screen, but Tuesday markets will buy these shares at $1.95 and it will sell at a higher price. Or actually, I think it's the other way around. I think it's buying at $1.90 and selling at $1.95, something like that. And then Zoeto is up from $1.60. It's buying at $1.64 and selling at $1.68. Um, and I know this because if I just pop over to the Tuesday markets behind the part you can't see, the brokerage side of this, um, we can see what the orders are this week and what they have been. These are literally the orders in the app. These two haven't been settled yet. These are all from last week. And we can see the live order book on the stock market. And you can see this page. Can't yet see the other page. It will something like that will be live for everybody soon. But this is the live stock market for these three companies. So these are the buy and sell orders from Tuesday markets. You can tell because they're big. Somebody else has orders for 1,000, and somebody has orders for 100 shares of Africa Eats. Buy orders are in green. Um, don't know who it is. It's a stock market. You don't get to know who your other players are, but someone is willing to buy. And then I think on the other two, it's just Tuesday markets. So Tuesday markets just leaves these orders out 5 days a week. Every once in a while, somebody who has a brokerage account will trade against them, which is how we get to numbers that are less than 10,000. And on Tuesdays, we go into the list of orders generated inside the app. And at 2:05 p.m. they get uploaded to the market, and at 2:30 they close. Okay, in terms of volumes, um, yeah, there is no great site for showing the volumes. Tuesday Markets has purchased over $1 million worth of shares by now of these three companies. Um, it has plenty of money in the bank account. It'll buy any shares anybody wants to sell at this point if you sell at the price that it's listed. Um, and it's doing that because these companies are, well, we believe these companies are going to go up. And so it's a good investment to have too many shares at the moment. But it also means that it sells when someone wants to buy. So these are the inventory of shares for these three companies for people who would like to buy right now. They are for sale 5 days a week, 10 a.m. to 2:30 p.m. Mauritius time.
And then on that same note, whenever we during that weekly auction that occurs, I think on average we've seen that the volume of trade compared to the rest of the SEM is quite notable. It tends to be in the top 10
Oh
in terms
yeah,
of the.
twice last week, Africa Eats was the second most traded stock in the stock market. I've seen it listed as third and fifth and ninth, but generally only on Tuesdays. You in most weeks, Monday, Wednesday, Thursday, and Friday, no shares trade, and that's not uncommon in African stock markets in general, not just the SEM. Even the big companies don't trade every day. Only MCB Bank, MCB Group trades 4 or 5 days a week. Even then, I've seen days when they haven't traded. All right, what else?
How many shares does Tuesday Markets have? Oh, you already answered that. Another one is for Zoeto and PMP, should the fair value in the Africa Eats books be the lower of the market value and director's valuation?
For Zoeto and Elite Meat, the value that we're booking in the balance sheet is the market cap on the stock market.
Mhm.
Um, that is how every other investment company values public companies.
Which is another reason why we use the fair value through profit and loss, because then we realize that every quarter
Yeah, and
when
we
we
are
report our
uh,
finances.
the we said no, we said few forward-looking statements, but our plan at Africa Eats is to list more companies every year. If you had asked us this in Q4 before the private placement, we would have said, twice a year, one or two each time. Now that we've done it, I would say our answer has been toned down a little bit to say a few per year, um, probably once a year, maybe twice a year. Maybe we'll get a squeeze in a second one at the end of the year, but most likely Once a year, we'll list a few more. And then our goal is to backfill the portfolio. Every time we list the company, we would like to add at least that number of companies into the portfolio so that we don't run out. And so in time, if all goes according to plan, again, forward-looking statement, if all goes according to plan, this is a portfolio primarily of public companies. And then valuation becomes much easier. We just go and look up their market caps on any day we want. And any day we can value the value of Africa Eats in minutes instead of weeks.
All right. So feel free to share any of the questions that anybody else has.
That was a Kyle question. Thank you, Kyle, for that question. Um, Kyle also had a suggestion for another wire transfer thing, but we haven't found one that works in Mauritian banks yet. We've looked. We will keep looking. We don't like spending $10,000 on bank fees. All right, if nothing else, we'll open up for more questions later. One more topic, or one more set of topics here. All right, so this got published today on our website. This is a graph that we've been updating on an annual basis. And this is the first go-to KPI we have when we think about what's the value of Africa Eats. And so underlying everything that we do is what's the size of the portfolio, not just in terms of its value, but in terms of its growth. These are generally fast-growing, profitable companies, and the easiest way to track that is to add up their top-line revenues. So we've been doing that since 2020. When we started pitching this company in 2020, we were touting the 2019 number of 6 point something million dollars. Now we are announcing that the total aggregate revenue of the portfolio in 2024 was more than $44 million. We stopped reporting the third digit. It moves around as we get more data. But we know that the first two digits aren't going to change. So it's 44 million up from 30 something last year. And we're tracking this back to 2014. So the oldest investment in this portfolio dates back to 2014. It's East Africa Foods, right? The one on the bottom here, the big blue one, the one on the bottom. They're sorted in size order, smallest at the top, largest at the bottom. And so Africa Eats is a spin-off of this accelerator program called Fledge. Fledge had made an investment in 2014 in East Africa Foods, in Zoeto in 2016, and PMP in 17, and so forth. And all those items in those portfolios are part of Africa Eats now. And so we always look back to 2014. Total revenues back then were $600,000. So we have seen this portfolio, at least I've seen this portfolio grow from $600,000 of total revenues for an entire year to $44 million. It took 11 years. That is a compounded growth rate of 55%. That is not normal. That is not a typical growth rate of companies in the food space in Africa. That is really fast. And you can see it. It's visible in front of you. A few things that like pop out to me when I look at this. It's just how many little tiny companies there were in 2016, 2017, 2018. And then a couple started to break out, and you can see them, a few grow and shrink again. And then boom, there's this fan out of very large companies by 2024. And the trigger for that is Africa Eats started in 2020. So typically, the way you look at this, that was the end of year 2020. Africa Eats started in the middle of 2020. So on the graph, it's around here. And it was the catalyst that made these companies grow, right? The capital that we provided to these companies at the right time in the right form. And so we have $16 million at Africa Eats and $8 million at Truck, and 4.8, I think, is it's Agri Supply, all the way down to the point where now, like, this is $1 million. This little tiny sliver here is $1 million. That's Zoeto. And I think Afri Health is just behind that. Just missed $1 million last year. I see something in the chat window.
Yeah, some more questions are coming in.
Dan asked, "How's the growth split across the various?" This is their revenue stacked on top of each other. This is not like they're not occluding each other. They're literally stacked on top of each other. So this is zero to $8 million. This is zero to $4.8 million and so forth. So, back there, they're stacked and they don't make much room. And up here, they're stacked and the top 10 are 90% of the revenues. Uh, Eric asked, what's the secret sauce? Yeah, I'm especially a slide on that coming up, but the hint is we wrote a book on it. There is no one thing. It's not like it was one, there's no one small thing we did to make this work. There's a lot of little things we do together that made this work. And if I knew we could take some out, we might take some out. But as far as we know, that it's all of them to combine that makes this work. And if I have to sum it up, it's the right investment at the right time in the right form with the right advice attached to it, which is really summing it up. It's a lot more work than that. Jimena, you think I have a better answer than that?
Um, I think the simple way to do it is we don't replicate what most people have already done before. We try to do things differently. So as long as you keep on trying to do things differently, then you come up with alternative approaches. And I think that's why Looney said it's not just one thing. It's anytime we engage with and have to make a decision on anything, for example, listing or where to list next, etc. Every decision is try not to do what the norm is. So I think that's how I'll say it would be the secret sauce if you summarize it that way.
All right, I got two questions we'll pop back to later. Moving on. Okay, so let's talk about what comes next. So put Q4 aside for the moment and talk about Q1. So welcome to Q1. We have reached $2.50 a share. Actually, I'll use the answer that Hamza had tossed in. Hamza is our head of technology at Tuesday Markets. He said, look, he looked this up. Tuesday Markets, since day one of trading, has purchased approximately $312,000 worth of shares. Or he said traded. I know we've bought most of this is us buying, but sometimes Tuesday's selling. Let's call it about $300,000 of shares got made liquid by Tuesday Markets. That's probably the best way to call it. All right, so we're $2.50 a share. All the shares of Africa Eats are registered on the SEM. I've talked about this before. They're liquid. They do trade 5 days a week. They have traded every day of the week, not 5 days a week every week, but they have traded on at least once on a Monday, at least once on many times on Tuesdays, and they have traded on Wednesdays, Thursdays, and Fridays. GMT +4 is the time zone. We are announcing today that we're opening a private placement. So that private placement is at $2.50 per share because that is the share price at the moment. And it's a discount to $2.58. Again, we're keeping with our tradition of saying we're offering a discount if anybody wants to join in. This private placement is closing on March 28th. And again, in terms of registered, these shares that you buy if you join the private placement will get registered just like every other share. They'll be the same shares as are available on the market. The difference is if you buy these shares, that cash will go into Africa Eats pocket and will get used for things I'm about to show you. And if you just buy them at $2.50 on the market, then that is cash that goes into the hands of Tuesday Markets to provide liquidity, and none of it goes to Africa Eats. All right, so let's talk about use of funds. There's 4 or 5 or 10 examples here. Number one is Truck. So Truck has grown from nothing to $8 million in 4 years. They literally had 134,000 in revenue in 2020 when they got started. They didn't even have an investment until 2022, which was from Africa Eats. I think it's the fastest growing company we have. It's a 180% compounded growth rate in 4 years. It's really hard to beat that. So they haven't quite doubled every year, but they started at almost zero. So anyway, this is next on our list to be listed on the SEM. We would love to get that done this year. But to do that, we're going to need to raise a lot of capital. They still need to get to grow. They still have a huge opportunity to grow. We would love to make some more investments in this company. And by the way, it's really profitable. So their pre-tax profit margins are the highest in the portfolio, 32%. And if you can't tell by the name, it's a trucking company. It's the first and only cold chain trucking company based in Rwanda, but driving all over Eastern Africa. This is a map from 2 years ago. The red lines are where the trucks have driven. Mostly it's out to the coast to feed the country of Rwanda or to export. There are companies that grow food in Rwanda and need to export to neighboring countries. Okay, second use of funds is golden pot. It hasn't grown at 180, it's only grown at 148% compounded growth rate. So when they applied to the Fledge program, they had done $24,000 in revenue. It was the end of 2019. Africa Eats has been the only equity investor to date. Did I get that right, Jimani? About to not be true, but it's
Yes,
true
that's right.
today.
Yep.
400-ish thousand dollars of investment from Africa Eats, 100,000 euro grant, and they're starting to get other investors. They grew to $2.2 million in revenue. I'm going to say that again, $24,000 in 2019, $2.2 million in revenue in 2024. They sell maize flour. They take maize, used to just be grown by women. Now they can't keep up with that. It gets turned into maize flour, it gets turned into breakfast cereal. So this is a great example of a company we want to be on the CEMEX. Not quite ready to get there. They're still building out the team to be a public company. So maybe another year. What they really need is a bigger building to get from 2 million in revenue to 10. They're going to need a bigger space. They have all the equipment they need. They just need a bigger place to put it. They need to be in a location that has a road that's passable when it rains. Right now, that road is not great. And then as they grow, they're going to hit the next issue, which is as they start selling into more supermarkets, the supermarkets will pay them 45 days later. And that's just opens up a big gap of OpEx. We can help fill that for them. Okay, number three, our biggest company, East Africa Foods. It's the biggest company in the portfolio in terms of revenues, but it is not by any measure the largest company in our portfolio by value. And the reason is timing. So we only own about 1% of the company. We were diluted down to like zero point 0.6 or zero point 0.7 back in 2020. We've been inching our way back up. So we have a convertible note out there. We have $1 million that will get converted into the next round. It is higher than our pro rata share. So we should get just past 1% in this next round, unless we raise a lot of capital in this round from you guys, in which case we'll put a lot more into the next round. Also, there are 5 other equity investors larger than us in this company. Most of them are in the form of 10-year VC funds. Most of them have already told us that they're already thinking about exiting. So we have an opportunity to try and buy out those positions as well. We did that with Zoeto last year with our one co-investor. We got a great price on it at Zoeto. We'd love to see if we can get a price that makes the other investors happy and gives us a discount to the next round. That would be great. Or we'll just lead the round with $3 million for their new rice processing facility. If we have $3 million, the plan for that shows enormous growth in the revenues of the company if that gets built. That looks like a great use of funds. That is our another opportunity in front of us. And then I said, if we list companies, our goal is to backfill with other companies. So where do we find these companies? Well, all the companies in the portfolio today are graduates of a Fledge accelerator somewhere in the world, one of 5 cities. One of the Fledge programs is called the Land Accelerator. One of the partner programs is called the Land Accelerator. It's been running since 2018. One of the alumni of that program is called Orchard Juice. They're also in the portfolio as a borrower of Africa Trees, which is kind of a sister company. It's a copycat, philanthropically funded, focused on agroforestry. So I've been following this one through my part-time work with my nonprofit that runs Africa Trees. This is a great example of a village scale company. It was literally started by a woman in a village in Kenya. And then she handed it off to her daughter about 10 years ago. And her daughter turned it into a national scale company that last year earned 2 million in revenues. This company has 0 outside equity investors. It is solely owned by mom and daughter. It has some loans now from Africa Trees, a few $100,000 only, and that's it. They got a tiny bit of grants, but this company's been grown basically organically. It is organic juice, but that's just a pun. Um, and we not only see the opportunity to list this one on the SEM, but we know that the Kenyan Stock Exchange, the Nairobi Securities Exchange, would love to have a company like this listed in their home stock exchange. To do that, we need this in the Africa Eats portfolio. What they're asking for right now is a pasteurizing machine. So for a, I don't want to say the number, for a relatively small amount of money that they can't afford, and which Africa Trees can't provide because of their philanthropic mandate, uh, this company could, 50% to 3x in revenue just by buying one machine. So we would love to buy, help them buy that in an equity investment. And then the rest of the opportunities are half in the portfolio and half out. So there are other companies that we haven't talked about. There's two new ones that just passed 1 million in annual revenue. So we're now at 10. So to say that when we started Africa Eats, one and only one company was past 1 million in annual revenues. Everyone else was smaller. There were actually 25 others back then. Now there are 10 companies past 1 million in annual revenues, one past 10 million, soon to be two, most likely. Um, there are still 12 other companies in the portfolio that haven't hit that milestone yet. We would love to get as many as possible past that goal. We would love to get some more of the ones that are past 1 million up on the CEMEX. It's going to cost some capital as well. And then we want to backfill the portfolio with as many companies as we can afford that look good, that look like they could follow the same path, that look like we could help get either like Orchard Juice from 2 to 10, or like more golden pots and get them from 20, 30, 50,000 to 1 million in revenues. There are literally hundreds of other companies in the Land Accelerator and Africa Trees portfolios. I've already viewed all of these. I've met most of them, a lot of them in person. And then there are other deal flow that we just get, without asking from other trusted institutions. All right, to sum up what we're asking for here, is we are opening up a private placement at $2.50 a share, where those shares will be liquid. We are probably Tuesday Markets is promising liquidity again, 5 days a week, however many hours that is per day. This private placement closes on Friday, March 28th. There is a $50,000 minimum investment. You can make this investment through a donor advised fund if you don't want to use your taxable money. And then two other quick notes on here. So every year, Africa Eats puts aside 1% of its ownership for smallholder farmers. That didn't get done in 2024 because the timing of the private placement then. So we will squeeze that into this round here. So 1% of 10.8 million shares will get put aside for smallholder farmers. And then in 2024, the shareholders of Africa Eats provided an incentive grant of shares to the Africa Management Company, which is the company that Jumane and I run. We manage Africa Eats, and so there's 1% that will get handed to Africo, basically as a compensation for getting the public offering done. And that is a grant that was approved that the board of directors can do every year for the next 4 years if they so choose. And so we're squeezing that in this round as well. So we're just getting that done. And again, it closes on March 28th. If you're interested, let me know. My email address is on the screen. You can use your family office. You can use your private savings. You can use your self-directed IRAs, your trusts. I think we've seen every form there is so far. And the last choice is to use your philanthropic capital through Realize Impact. And I can answer your question on how that works if you have any questions there. Somebody had asked earlier what our secret sauce is. Jumene and I published it. It's in a book. If you want to know all the details on how Africa Eats works, how we work with our companies, how we pick our companies, how we make investments, the investment style we use internally, the way we teach, it's documented in a book. And it's all inspired by Berkshire Hathaway, so we called the book Berkshire Africa. Details at africaeats.com website. Books available currently only in print form on Amazon, hardcover or softbound. At some point, we'll get it on Kindle. And we'll go back to questions now. Kato, you have your hand raised.
Yeah, I had two questions. The first was on the fundraising costs. Sorry, I don't have the slide of the P&L, but I think I
Yep.
remember seeing around $300,000 of costs. Those $300,000 relate specifically to the 3.2 million raise. Is that correct? And
Yeah.
how does this evolve going forward? Is that going to, because it seems quite expensive, or does it get a lot cheaper now that this year was very expensive because you were doing the listing and everything. So
Yeah.
going forward, how should we think about how that cost evolves? Second thing is, I didn't see on the balance sheet any translation losses because you are reporting in dollars and obviously in these local currencies that are sometimes underperforming the US dollars more often than not.
Okay. One question at a time. We'll come back to Forex after this, after the fundraising fees. Okay. So fundraising fees is a mix of two things. One is success fees. So we do pay our investment advisors a success fee. We pay, even before that, we have some other institutions that introduce us to investors, and we pay success fees for that. And we love paying success fees, which because it means we raise capital. And then the other one that's extraordinary to the way we do business is that we paid the money to list Zoeto and Elite Meat. So we covered all the costs for incorporating the parent companies, all the costs for doing the pre-listing work, the private placement, the listing fees, all the KYC for all the shareholders. We covered that. Um, and it was a little less than $100,000 per company to list each company. And what's weird about that and extraordinary about that is if you think about this from the venture capital point of view, and we're much more like a VC fund than a PE fund, but we're neither. They don't do that. They don't spend the money like that. They would always turn that into equity and then have the company spend that money on that work. And if we were a loan fund, which we're not, we're different. Um, we would have lent the money to the companies and had them pay us back with the use of the funds. Instead, we chose to put it on our income statement and our expense line. Um, and we thought that was the best way to structure it because the valuation of those two companies going through this process went up from where it would have been in the private space, and B is now a lot easier for us to measure going forward. Um, and those two companies raised over $1 million between the two companies. It wasn't split evenly. It was like 800 and 600 ish, which is more money than they had ever raised each. The amount they each raised was more money than they had each ever raised before in the history of their companies. So we spent $100,000 for them to raise over $1 million, which again, it's 10-ish% or 20-ish% if we count the two individuals, which sounds really high, right, compared to what an investment advisor would charge. But they're now public and we can do another. We're not doing a private placement for them right now, but we can do another private placement for them this year and another the year after that. And the cost of doing that will be a lot lower. That will not be $100,000. That'll be single digit $1,000 or $10,000. So we will leverage this 100,000 we already spent on them. And we provided a path for investors to invest in them that would never have invested in them as private companies. And so that was a little bit over and above the normal costs of fundraising, but in exchange, we've now at least cracked open a door that we believe in the future will open further and bring in a lot more capital. Does that make sense?
Very clear. Thank you.
Okay, and then Jemana, you answer the question on Forex.
Great. And if I understand it correctly, you're just asking how is that reflected in our balance sheet? Um,
Yeah.
so for
Yeah.
so for each of our companies, so in terms of how we do valuation, let me start from there. Internally, so for this, we do a revenue multiple. For our audited accounts, we have an independent valuation firm, and they tend to use an EBITDA multiple, and in some cases use DCF. I think someone asked the question before too. So in the case of the two listed companies, I think PMP was a EBITDA multiple, and Zoeta was a EBITDA and a DCF. So that answers someone else's question. But in terms of that valuation, each of the companies, they report their figures. We translate that into USD, and then
Quarterly.
we do
Quarterly.
quarterly, yes, and then we do our valuation. And so consequently, the any depreciation or appreciation in the currency is reflected in the revenue of the company. Since it's that we translate that to USD and then into the multiple. And so hence when we do our valuation, it already incorporates any increase or decrease. So before, when Looney shared, the 55% CAGR growth rate over the last 10 years, that already factors in the various changes within the exchange rate at the portfolio level for each of our companies. Let me know, Kato, if I didn't answer your, if there's another aspect of the question that you're looking for.
No, that's clear. Thank you.
Okay. And I think you had a third question.
No, I only had the two.
Okay. All right. I see there's some more in the chat, but does anybody else want to, if you have any other questions, you can always put up your hand.
Kyle wants to know why we haven't put the book on Kindle because apparently it still has typos in it. I want to update the section on public markets because it was written on the flight to do the first roadshow, and now we know a lot more. So we should really update that. I want to pull in my old proofreader to fix the typos, and then we'll get it on Kindle. Eric asked if Orchard Juice does Del Monte repackage their products. Orchard Juice sells concentrates to Del Monte. They're not the sole provider to Del Monte. They're a provider. So if you're in Kenya, if you go to Carrefour, you buy Del Monte in a box. There's a chance you're drinking Orchard Juice. They do sell directly to many of the hotels in Nairobi, so very likely you have drinking Orchard Juice. It just doesn't have a brand on it. They don't sell with their brand on it.
And there's a question about the shareholding we have in Golden Pot Truck and Orchard Juice. So I could say for Truck, I think we have just under 25% shareholding. In Golden Pot, we have 34%. And then Looney, I'll let you answer with guarding Orchid Juice.
Orchard Juice, we have zero. No, nobody owns it. The only people who own Orchard Juice are mom and daughter. They are open to it. I talk to her every few months, the CEO, and yeah, she's totally open to an equity investment if we provide enough to buy this pasteurizer.
So yeah, so they're not part of Africa Eats, they're part of Africa Trees, but yes, it's part of the pipeline of potential companies that we can. I guess we have a large pipeline, and they're an example company.
I can't tell if this one's private. Somebody responded to Eric about special sauce in the chat window, which is a good comment. I think it's marked red. I think it's private, but private to me. Part of this is not into fund. We're a 10-year fund. We're not a 15-year fund. We're not a 20-year fund. We're not a fund. We're an investment company. We intend this company to be around for generations, hundreds of years. We don't intend to. Oh, we didn't say this here. We're not intending to sell any of these companies. We intend to see these companies get much, much, much bigger. Right? Not all of them will. Some of them will. Some of them might get purchased. We're not looking to have any of them be purchased or get acquired. We're looking at making them much bigger. And that difference in attitude and the difference in patience of capital makes a huge difference in how you invest in these companies. So again, going back to Kato's question, yeah, we spent about $100,000 per company listing the companies because they're now public. Two of them are public, and we expect them to be around for the next 100 years as well. And even if they do follow down the acquisition path for some reason, now they're a lot more visible. Now the odds of them being acquired for a reasonable amount of money just went up. So our long-term value of these companies because we spent that money on them, went up. Maybe it didn't go up in the balance sheet this quarter, but it probably went up on those balance sheets in the future. Again, forward-looking statement. I can't guarantee that. Um,
Good question from Doris. Kindly shed light on how you ensure positive price discovery once the companies list.
um, we haven't really started that yet. So far, all we've done is we did a roadshow in Mauritius and a teeny non-deal roadshow in Kenya. We met with many, many, many institutions, dozens and dozens of institutions. The existing shareholder base is multiple dozens of family offices. We made sure that they knew that about this as part of the roadshow as well. We did Zoom calls for them. And so there are currently about 170-ish shareholders of Africa Eats and 160-ish shareholders of the other two companies. And some of those investors bought more shares and some sold. Probably not quite even, but pretty close to even. And at some point later this year, we will start to advertise. Tuesday Markets will start to advertise the app and the existence of these companies. Africa Eats has plans this year to start doing some marketing and PR to make it much more widespread. The fact that the Cemex exists and these three companies exists. And we do expect that in the long run to turn into more people wanting to buy shares on the market through the app or not through the app. Don't really care. So we do expect that will drive interest, and limited number of shares should keep the price up. And then second to all that, Tuesday Markets is the registered market maker for these three companies. As part of the rules in the SEM, it can't not make a market. It must continue to do that for, I don't remember if it's 3 months or 6 months, but there's a minimum amount of time it has to be the market maker. It has standing orders for all three companies right now. Again, Hamza had shared that Tuesday Markets has purchased around $300,000 worth of shares already. You might do that next week, and it might take a few months to do that again. It depends on how many shares people want to buy and sell. It can do that for a long period of time. It's well funded. And that basically puts a floor on the price. So the prices are not going down because Tuesday Markets owns these shares too, has a very good incentive, aligned incentive to not let the price go down. So these bids will stay where they are until more people want to buy, and then they'll work their way up. My expectation of Africa Eats is it stays at 250 until this private placement is done. Because why would someone go to the market and buy it for 251 or 255? You can if you want. You don't have to. S. Henry asked, a segue to that, is the private placement a priority to existing shareholders, meaning is it actually a rights issue? I don't actually know what that means. It is the way it's discussed to us by our investment advisor is it's a private placement. So new shares issued by Africa Eats Limited that get created from shareholder resolution, and then sold to new investors, and those shares are then registered on the market. So they're not being sold. The new shares are not being sold on the stock market as a secondary offering. They're being sold off the market as a private placement. Again, private placement closes the last Friday of March, and then paperwork gets done the week later, and the shares show up probably 2 Fridays later or 3 Tuesdays later.
And the last part of that question was, there's no preference to existing shareholders. It's open to equally open to anybody, any participant who wants to purchase
anybody who would
shares.
like to buy shares, yeah. In any means you have to buy shares in dollars. All shareholders must complete KYC processes in Mauritius, but other than that, there's no constraints. I think this one's also private. What's the difference between an IPO and a private placement? And why did we choose the latter? This came from our investment advisors. They give us advice. Technically, an IPO is when you issue the shares on the market for buyers to buy from the stock market. And a private placement is when you create the shares, sell them privately to institutions and individuals, and then days or weeks later registers those shares so that they can be traded on the market. That is the difference between the two. The private placement path is a little less paperwork, a lot more certain on how many shares there are. There's just even with the private placement, we didn't know how many shares we were selling until the day it closed. There are provisions in the private placement path for what to do if there's too many buyers. We didn't have that problem. We'll just make more shares in this private placement. We're not expecting, we're not expecting gigantic, eight, 9-digit checks here. We just took the easier path, which is private placements. In the end, you wind up with exactly the same thing. You wind up with shares that are tradable on the stock market.
And Eric has 3 questions.
Okay. How does your pipeline of new investments look like? It looks like hundreds and hundreds of companies. Again, I've met probably 100 of them in person. Off the top of my head, I know Orchard Juice is like top of the list. There's a few more that I've met at Suncorp last year and in other events that are pretty high on the list that we still need to go back through diligence on. Still need to diligence Orchard Juice. There could be some chance that we find something, but highly doubtful at this point. And then I know more of the bigger ones off the top of my head from meetings, but there are 100 little companies that could be the next dozen golden pots. Not just the next golden pot. There are literally dozens of opportunities that look like they could be like golden pot. And again, golden pot was this one. It was $24,000 in revenue 5 years ago, $2.2 million last year on a few $100,000 of investment capital, all from us, basically. Eric wants to know where we'll get the presentation and recording. These slides should be live now on Tuesday.Africa/eats. I asked Hamza to get that done at the start of the market. I will put the recording. We'll get the recording on that same website as well, and we'll share it to other sites that post information about public companies. And then Eric, last question on here. We're at time here. Is what's the progress with the Nairobi Securities Exchange? We're not announcing anything with the Nairobi Securities Exchange on this call. We are talking to them, but there is nothing to report at this time. All right. With that, thank you all for coming. Thank you for all of you who are still here. I will sign off the people who are watching this online.